Good morning, 5-minute traders. NVDA, everybody's darling. This stock has had a heck of a run, as you can see here. We're looking at a multi-year view of NVDA going back to 2013. So we're looking at 4 years here, and you can see how big this stock has moved. $12.20 is our 5-year, 4-year point of control. So we are way out of value. It doesn't mean we're going to come back to it anytime soon. But the one thing that I would say is if you look at the last, as we telescope in here and we look at NVIDIA just over the last year, things have changed. Things have definitely changed. And the one thing that I would say is I don't want to be on the long side. And what I would like to see is I would like to see a test before I sold, and we're seeing that right now. So remember, there's the rest, the move, the test of where we rested from, and then the continuation of the move. So guess what's happened? We were moving one way, and we have now broken after a base test. So now we are going the other way, however, testing this, and it's happening right now, today. We're testing this move right back here to 147. Now, I believe that you've got to give this some room. You need to be short from where we are today, 147 up to the mid 160s. So how do you do that? You can do that pretty easily by putting on both options and stock. And one way I would do it is I would buy calls above 170. Okay, so those are going to be pretty cheap against the stock that I'm selling. And I would do this in some sort of way that I would actually be maybe to start net long. I might have 20 calls versus 10 or 1,000 shares short. So that's one way you can do it to protect yourself if we are to rise a little bit further. It's just a cheap way to get some insurance on the call side if we were to continue to rise as we have the last 3 or 4 days, and we're at 147. Remember, we fell down here. This is a $10 move. We're at 138 and we're now at 147. So this is, you can see this is an area that I'm interested in selling. So we're going to short NVIDIA and buy calls against it. So you buy calls, again, calls above over the next couple 3 months at 170 or so, and you sell the stock outright. This gives you room to make some money on the calls by selling more stock over the next $15, $20 if it does rise further. Again, that's a straight hedge. If you want to just straight up short the stock, that's fine also, but I like to give people options. And this is a good way, it's really a backspread is what it's called. It's really a good way to protect yourself. Now, if you look at the shorter time frames, you can see very easily, and if you only play the shorter time frames, you might be like, oh, this is a pretty good moment to buy. If we just look at, for example, the last month of trading, it looks like it filled the hole in here, and it's coming back. But all we're doing is testing this heavier area up in here, I believe, and we'll come back and at least rotate down to the 100 level. Now, this trade, the backspread, is really the right way to do it. You want to sell into strength. So the easy way to do it is, again, sell stock outright and buy calls against it. So look to do this. We came into value here at 144. Again, we're bouncing. And again, I hope we bounce higher so I can sell more stock at 152. And the way that I do this is I buy calls against it. That protects me and gives me peace of mind as the stock goes against me. You can do this each time you sell stock. You can buy calls out against you. That way it's kind of like, okay, cheap insurance, but I'm looking for a bigger move. That's why I do that. So I'm looking for a $20 to $40 move when I'm selling a stock this size. And that's the reason why I like to backspread, protect myself, and go from there. All right, have a great day. Have a great weekend. Hope everybody is loving the 5-minute trader. Any questions, drop those to us. And any suggestions, we're happy to hear your thoughts. Thanks.